If you're busy during the day and you're still day trading, that's exactly why you're struggling right now. So in today's video, I'm gonna be breaking down the best way to find those larger swings. So let's not waste time, let's get straight to the video. All right, so first off, if you guys don't know, I'm a swing trader, and swing trading allows me to focus on these type of better setups that play out over time. So instead of trying to catch every small move, I'm positioning myself for the larger moves between certain key areas. If I'm being honest, it's really something I wish I started sooner when I first started trading, but enough of that. Now, this is a perfect example of how the market can actually move when you simplify things. First thing I want you to focus on is the structure of this setup. I always like to see clear channels forming. So you have the top trend line acting as resistance here, and then you have the bottom trend line acting as support. So since, let me see, late March, is when this started, this consolidation, and then price started to move between those two levels. Now here's where swing trading comes in hands. So for me personally, I'm not chasing price in the middle, and that's where most people get trapped. And I fell for it too, if I'm being honest, but it never made sense to me. If you're busy during the day, why trade in the worst area of the chart when you can just wait for price to come into these key areas? At the bottom of this channel, that's where buyers usually step in, and that's where reversals start. And right here at the top of this channel, that's where sellers are stepping in and where price gets rejected. So every time price touches that lower trend line, we get the same reaction. It might not be automatic every single time, but over time it consistently leads to a move higher or move lower. Now, not to get off topic, but when you add layers like RSI, this is where things become even more clear. So if you look at RSI at each of these swing lows, you'll notice that it's always bottoming out right as price hits that lower trend line, and then we see a push higher. So now you're just not relying on one thing. You have trend line support, price reacting at that level, and then RSI. And it's the same idea on the upside. As price pushes into the top trend line, you'll notice RSI starts hitting the same type of level. Let's just call it resistance for now. And that's where you start thinking about taking the other side. Now, one quick thing I want to touch on, especially if you're playing options, make sure your expiration is at least 60 to 90 days out. I know some of you guys that's watching this video right now that are addicted to short dated contracts. And what ends up happening is that you pick the right direction, but somehow you still lose money. And that is what's called time decay. I have a video all about options. I'll put a link here. Go check that out after you're done with this. So what you guys need to realize is that the closer you get to expiration, the faster your contracts lose value. So now you're not just fighting direction, you're fighting I guess time. And the way I approach it is I'm not holding all the way into expiration. I'm usually looking to ride the move about like halfway through the contract, because now you're not watching every small move. You're letting the setup develop the way it actually supposed to. And this ties directly back into swing trading, because you're not just rushing into anything, you're giving the trade time to work, and obviously while still managing risk. And that alone will save a lot of people from unnecessary losses. Now, this is the part where most people get trapped. They see a strong move and they enter right in the middle of this range. And that's the worst place to trade, because now you're taking on more risk and you're relying on continuation without the actual confirmation. So what you want to do instead is let price come to your levels, let the setup form, and then make your decision from there. And this is where options come into play. So with swing trading, you can take advantage of both sides of the move. So for an example, at swing lows, you can look into calls and you're entering near support. And at swing highs, you can look into puts. You're entering near resistance and you're playing the pullback. So for an example, in the Discord, we played the downside on Tesla and we took a quick 25% profit on that trade. And after that, I mentioned there was going to be an upside gap that we can trade as well. And it moved from 340 to now, I believe it's at 365. I'll post some screenshots here, but that's why I always tell you guys, patience matters the most in trading. And when you combine things like trend line, support and resistance, RSI, you start to filter out a lot of bad trades. And once you start trading like this, everything slows down. Your entries get better and your decisions become much more clear. This is just a small video on certain things of my personal trading strategy. If you guys want, I can make part 2. And as you guys know, all of my entries, my exits, and all this information is packed in the Discord. The link is in the description. Let's get this video 200 likes, and I'll see you guys in the next video.